potential for China to strategically use tech news to influence AI investment decisions right here in the United States. Analysis reveals a compelling narrative. It appears increasingly likely that China is leveraging news of its technological advancements, particularly in AI, to sway U.S. investors. The impressive progress of companies like DeepSeek, coupled with significant state-backed investment, seems designed to make waves in the volatile U.S. chip stock market. Research suggests that reports highlighting China's efficient AI models and the sheer scale of its investment funds may be prompting U.S. investors to take a closer look at their current valuations. This reassessment could lead to significant shifts in investment strategies as the AI landscape evolves. The evidence points towards Chinese tech news generating uncertainty among U.S. investors. This is especially true within the context of the ongoing technology Cold War, where U.S. chip stocks have seen a decline in market share over the past 2 months, making investors particularly sensitive to any news that could impact their AI bets. To understand this dynamic, we need to look at the backdrop of U.S.-China tech tensions. Back in 2025, under President Trump's second term, these tensions have escalated significantly. Aggressive tariffs and retaliatory measures have become the norm, creating what many are calling a technology Cold War. This has inevitably disrupted global tech supply chains, with the AI sector feeling the impact. U.S. chip stocks, the very foundation of AI development, have experienced considerable volatility. Recent reports from March 14, 2025, show major indices like the S&P 500 and NASDAQ facing declines, reflecting broader market anxieties. Over the past couple of months, U.S. chip stocks have indeed lost ground, making investors acutely aware of any news that could further influence AI investments. So, how is China using tech news in this strategic play? Several key developments stand out. In January 2025, DeepSeek, a Chinese AI company, unveiled an open-source AI model that reportedly matched U.S. capabilities but at a much lower cost. This announcement sent shockwaves through the U.S. tech market, with NVIDIA alone losing nearly $600 billion in market value. Around the same time, China signaled its unwavering commitment to AI by establishing an $8.2 billion AI investment fund, a clear statement despite U.S. trade restrictions. Adding to this narrative of Chinese AI prowess, news emerged on March 6, 2025, that another Chinese AI entity, Manus, claimed to have outperformed even OpenAI. These news items have not gone unnoticed by the markets. They have triggered palpable reactions, with U.S. investors expressing panic over potential competition. This has led to sell-offs and increased market volatility. Since President Trump's re-election, the S&P 500 has fallen by approximately 9%, while Hong Kong's Hang Seng Index has surged by 17%, fueled by the performance of Chinese tech stocks. Analysts are even suggesting a potential shift, with some U.S. investors now exploring potentially undervalued Chinese AI companies, despite the inherent geopolitical risks. This adds a significant layer of complexity to investment decisions. Interestingly, our analysis reveals an unexpected detail: the potential for U.S. investors to actually diversify their portfolios by investing in Chinese AI companies. The news of cost-effective models like DeepSeek's, despite the ongoing geopolitical tensions, is driving this consideration. Analysts note that this potential shift highlights the intricate interplay between market opportunities and strategic considerations, adding a fascinating layer of nuance to China's influence. Let's delve into a more comprehensive analysis of how China is strategically employing tech news to influence U.S. AI investment and the broader AI market. We need to consider the volatile performance of U.S. chip stocks within the context of this technology Cold War, as it stood on Tuesday, March 25, 2025. The U.S. chip stock market in early 2025 has been characterized by significant volatility, with major indices experiencing notable declines. As of March 14, 2025, the Dow Jones Industrial Average recorded its worst weekly performance in 2 years, while the S&P 500 and NASDAQ also saw substantial year-to-date drops. This instability stems from investor concerns about tariffs, the overall economic outlook, and the performance of the tech sector, making the market particularly vulnerable to external shocks. The recent loss of market share in U.S. chip stocks, with giants like NVIDIA and Broadcom seeing sharp declines following Chinese AI news, further underscores this sensitivity. This market context is set against the backdrop of heightened U.S.-China tensions. President Trump's trade policies in 2025 have imposed significant duties on Chinese goods, impacting trillions of dollars in trade, with China retaliating in kind. This trade war 2.0 has disrupted tech supply chains and eroded investor confidence, particularly in AI-related industries. China's strategic use of tech news in this environment is multifaceted. The release of DeepSeek's AI model in January 2025, claiming to rival U.S. models at a fraction of the cost and development time, sent immediate ripples through the market. The Nasdaq experienced a significant drop on the day of the announcement, and Nvidia's market capitalization plummeted. This news clearly fueled fears of intensified competition. Furthermore, China's establishment of a massive $8.2 billion AI investment fund in January 2025 sent a strong signal of its commitment to becoming a leader in AI, despite U.S. efforts to restrict its progress. This move potentially signals to U.S. investors a shift in the global AI power balance. Beyond these headline-grabbing events, China has also been actively promoting its advancements in AI through various channels. Premier Li Chang's emphasis on AI in his annual report in early March 2025 highlighted the nation's focus on technological innovation amidst trade tensions. The launch of Manus, claiming to outperform OpenAI, further adds to this narrative of China's rapidly advancing AI capabilities. Chinese state media has amplified these developments, often framing them as pivotal AI Sputnik moments to further shape global perceptions. This strategic messaging extends beyond traditional news. Reports suggest China has been employing AI-driven propaganda, including deepfake news anchors and generative videos, to influence narratives about U.S. technological stability. Additionally, bot networks on social media platforms have reportedly spread claims about the unreliability of U.S. AI infrastructure while promoting the superiority of Chinese AI, all contributing to eroding confidence. The impact of these Chinese tech news items on U.S. AI investment is significant. The immediate market reaction to DeepSeek's announcement was a sharp decline in U.S. tech stocks, with the Philadelphia Semiconductor Index experiencing a substantial drop. This volatility underscores how news of Chinese advancements can trigger rapid sell-offs and force investors to re-evaluate their positions. Since President Trump's re-election, the S&P 500 has seen a notable decline, while Hong Kong's Hang Seng Index has experienced a significant surge, driven by the performance of Chinese tech stocks. Analysts have observed that while Chinese tech companies, including newcomers like DeepSeek, might be trading at a discount due to geopolitical concerns, their technological advancements could spark renewed interest among U.S. investors seeking undervalued opportunities. This potential diversification into Chinese AI, despite the inherent risks, adds a layer of complexity to understanding the influence of tech news. The establishment of China's AI investment fund and its focus on large-scale AI models could lead U.S. investors to anticipate increased competition, potentially dampening their confidence in the future earnings of U.S. AI firms. This is particularly relevant in the context of U.S. export controls and trade restrictions aimed at hindering Chinese AI development. However, China's demonstrated resilience highlights the potential impact of its strategic messaging. Furthermore, reports suggest that U.S. initiatives, such as the proposed Stargate AI infrastructure plan, are struggling to gain traction, potentially further influenced by the narrative of China's rapid advancements. In the context of this technology Cold War, these news items amplify existing tensions. U.S. investors are likely factoring in geopolitical risks when making investment decisions. The U.S. government's finalization of rules in October 2024 to curb AI investments in China underscores this tit-for-tat dynamic. The use of misinformation campaigns, as highlighted in our analysis, further weakens trust and could potentially impact global adoption and collaboration in the AI sector. To illustrate the key points, here's a comparison of significant Chinese tech news and their potential impact on U.S. AI investment. DeepSeek's AI model release in January 2025, showcasing an open-source model with low cost and comparable capabilities to U.S. models, triggered sell-offs, increased volatility, and a reassessment of valuations in the U.S. market. China's $8.2 billion AI fund, also established in January 2025 to advance AI capabilities despite U.S. restrictions, served as a strong signal of competition and a potential catalyst for a shift towards Chinese AI investments. The focus on large-scale AI models in March 2025, as emphasized in a parliamentary report, further heightened the perception of China's AI prowess and potentially impacted confidence in U.S. AI firms. The launch of the Manus AI bot on March 6, 2025, claiming to outperform OpenAI, while having a limited immediate impact, contributes to the overall narrative of rapid Chinese advancements in AI. As we've discussed, an unexpected detail is the potential for U.S. investors to diversify into Chinese AI companies, driven by the news of cost-effective models like DeepSeek's, despite the prevailing geopolitical risks. This suggests a complex interplay between market opportunities and strategic considerations, adding a significant layer of nuance to China's influence on U.S. investment decisions. In conclusion, our analysis demonstrates how recent Chinese tech news, coupled with the volatile performance of U.S. chip stocks, is actively influencing investment decisions in the U.S. AI market. In the context of this ongoing technology Cold War, developments like DeepSeek's model and China's substantial investment fund highlight the need for U.S. investors to navigate a landscape where geopolitical tensions and technological competition are deeply intertwined. Staying informed about China's rapidly evolving tech sector is now more crucial than ever for making informed investment decisions and effectively balancing risks and opportunities in the AI market as of March 25, 2025.